They say that there are two things that are certain in life: death and taxes. Well, taxes are pretty certain. If you're making money, paying income tax is generally what happens. It's no fun to pay taxes, but it's great to be making money. I was talking with a company today. They've been through some tough years. They had several years they weren't making money, they lost money, cash flow problems, but we're able to help them work through that. And now they're in a situation, they've got a new contract that's really going to boost their profits. So now they're in a situation where they have, they're making enough money, they're going to have some significant taxes they're going to pay. So we were talking about a number of the different strategies that you can use to reduce your taxable income. And there's, as you earn more income, there's a lot more tools that you can use out there. But it sounds really complicated when you start to think about all the different tax stuff. One of the things that that I kind of talked about with them was that with income taxes, there's really only two strategies that you can take. You can either change the way an item is classified that might make it more or less taxable. For an example, if you had a business lunch, that's 50% deductible. Okay, so you only get half of the expense on your income tax. On the other hand, if you hire somebody and you pay them wages to do that work, well, that's 100% deductible. So how you spend the money, and so that's kind of a classification thing as an example. One classification gets you half a deduction, the other gets you a full deduction. Great. So changing how something's classified is one thing you can do, and the other is changing the timing. So they talked about they might buy some equipment for their company. Do they buy it this year or do they buy it next year? And when does it actually get installed? So if it gets installed before December 31, it's deductible this year. If it gets installed after December 31, it's deductible next year. So that's a timing issue. It's an example of a timing issue. So there are just shelves and shelves and shelves of books that contain IRS tax code. It's an extremely complicated thing. But when you boil it down, you're either changing the way something's classified or you're changing the timing of the event. And that's your two tax strategies. And so whether that is about using some sort of tax credit like the R&D tax credit, or if you're using some exotic new structure to put money into some kind of retirement plan or whatever it might be, it really falls into those two concepts. That kind of helps you think about ways to do your tax planning. Hope you enjoyed that. Love to hear your comments, questions in the comments below this video. But that's all for today.